Jayesh Mehta, Country Treasurer at Bank of America Merrill Lynch, now joins in on the show. Thanks very much for being with us, Jayesh. It's been a pretty bleak picture, a slew of downgrades coming in from brokerage houses, and Bank of America, for one, saying that there is no recovery in sight also till June 2014.
Yeah, that's what our research has put out, and I think that's all moving out again, driven it mainly by currency, followed by, because of currency you have tighter monetary policy, and that's what pushes back the rate cut expectation. And therefore the research has kind of put in a lower forecast. I think from our point of view, it also looks at whether we have the macro changes. Some of them are expected post-parliament session. So once that is done, that would at least give some relief. I think we still require some sort of fundraising, which there have been various talks to stabilize currency. It's been very stable today, and hopefully, if it remains like this for some more period, that will give a lot of confidence. So that's what we need to really see.
Jayesh, do you think brokerages and everybody else around, frankly, is being excessively pessimistic? Because if you see the rupee, there has been talk that it seems to have overcorrected, in which case you are going to see exports pick up. And already there are signs that the trade deficit certainly has come down. So would you think that the markets have overcorrected? I mean, the currency particularly has overcorrected. In that case, the GDP estimates that we're seeing are all tending to be excessively pessimistic. And we should really end the year closer to 5% rather than the 4.4, 4.6 that everybody's talking about.
I think GDP prediction will leave it to our research guys and economists. So I think they have revised it down. And I think their thing is, we will have to take some more time for rupee to really stabilize at a good level, and that may defer the rate cut. Though the market view is slightly, I'm talking about the bond market, they are looking for, at least for the time being, currency is kind of settled. You require some macro step, which people are expecting somewhere post-parliament session it will come. And of course we have to watch the 20th September policy, how it goes. And I think very rightly so, RBI has actually moved the policy date beyond the Fed policy, so that would give them a more clearer picture as to what happens in the Fed meeting on the 18th September.
Jayesh, over the weekend, we did have those petrol and diesel price hikes coming in. Do you think that this is at least a step in the right direction to rein in the current account deficit?
I think petrol price was good. I think diesel price, the market expectation is much larger, and that's what, as I said, amongst a lot of things, market is expecting maybe a larger hike of diesel somewhere post-parliament session. But that's what we will have to wait and watch, right? Because there has been an expectation build up that there would be some announcements for the macro on post the parliament session. So that's what people's eyes are there. And of course we do hear that a lot of projects have been cleared, and the impact of that also will be coming in next couple of 2-3 months. So it's again maybe people will actually see when it is coming, but in the meantime we still have to see that currency really gets stabilized. I think today is a good day, and if we see somewhat similar situation continuing for at least some more time, that should give a lot of confidence back.
Jayesh, I think all eyes will be on the new governor who takes over this week. What is your sense? What is the kind of expectations you have? You think they'll continue the same policies of before, or will there be a dramatic shift in policy? RBI has always been accused of being very conservative. So will it continue to be that way, or do you think there will be a sharp change in direction?
No, I think initially people were thinking that the money market tightening measures might get rolled over on 20th, but now, having moved the policy post the Fed thing, I think the new governor will take a decision post the Fed situation. So I think, it would be very difficult to predict at this juncture, maybe, for anybody, forget us, even for RBI or anybody, till they actually hear out the Fed situation and then maybe post that. But I think more and more, I would say, more and more focus is getting on growth, and hopefully, if not this 20th September, maybe in the next policy, we will see something which focuses more on growth.
The shifting of the policy date to after the Fed meeting, is that a formal acknowledgement now that the Fed virtually is the central bank of the entire world without the obligation of being the lender of last resort? So all other central banks, particularly in emerging markets, have to take Fed policy as a given and adjust their own policies to what the US Fed dictates. Is that a formal acknowledgement of that position?
I would not know about that, but I think, yeah, it's a right thing to do, right? Because you have a policy and then you have a Fed policy coming in, something which will have very dramatic measures or a very different situation, then you might have to, do some changes, within the 1 week of the policy announcement. So I think it's actually better to actually move it post the Fed situation, but I don't think it's formally acknowledged or done any sort of this announcements, right?
Yeah, except that if you look at central bank policies, there's nothing which says that you have to make your announcements only at the policy date. Agile central banks, in fact, always try to surprise the markets and, fine-tune the liquidity in the system depending on what the situation demands. So why is there this feeling that, policies changes have to be announced only on the policy date? Is it not a good idea to take markets also by surprise once in a while?
We used to do that, right? And I think, at that time we had semi-annual policy and then quarterly policy, but now we have moved it to 45 days policy, right? And if the circumstances cannot really wait, they would still do it. I don't think there is unwritten rule that they will not change anything without the policy dates, right? So from that perspective, if there is something very dramatic, they would still change that. But having said that, that does not stop them, if you really look at 15 July measure, which is, in a way, monetary tightening, though they didn't change or touch the policy rates, but it did indirectly impact the policy rate, particularly on the CRR. So to that extent, they do take that into account. But yeah, this has been a recent last 2 years phenomena where we stick to the policy date, but I don't think there is any written rule that we'll have to stick to policy dates.
Given that the economic slowdown seems to be a reality, and at least for the next quarter certainly, are you expecting or hoping really that the RBI will announce any further regulatory forbearances in order to shore up banks' balance sheets? Already investment portfolios have taken a hit. The asset side in terms of advances, there have been numerous hikes as far as NPA portfolios are concerned, the size of the NPA portfolios advances. So do you anticipate or is there any hope of the RBI giving further regulatory forbearances?
I don't think, I wouldn't be able to comment on that. I really don't know. So I don't think I am the right person to comment on that particular situation, right? Maybe our banking analyst would be in a better position to answer that.
In the meantime, Jayesh, what's the call on where you see bond yields stabilizing? Because they do currently continue to hover at levels of close to 8.5%.
Yeah, I think that's 8.5% is now kind of become a new normal, and I think where we see it happening is, as of right now, if we don't really see any dramatic change till the policy, we might see slowly coming down. And as we go closer to the policy, of course, keeping Fed in mind, there would be an expectation of a little bit lowering of yield, but we actually still have to see. But I think yes, 850 is kind of really getting it's not really been able to even go below that, having the monetary stance which we have at this juncture, particularly on the short end of the curve. So, and of course it is also reacting to the currency movements, right? So, and currency today has been very stable, and I think if we see that stability continue to be there, and maybe if we see currency coming below 65 in next 1 week or so, we would see 830 very soon.
Jayesh, good having you. Thanks so much for taking the time out and joining us and giving us that perspective. Maithili, always good having you and taking us to the discussion and giving us your viewpoint as well.